All right, what's up, tycoons? What's up, traders? Super excited for today's video. Coming at you guys with another viewer request. All right, this time we're going to be taking a look at the PAXgold token, PAXG, all right, USDT. Breaking things down on the daily time frame as always. We're going to go over the possible bullish structure that I have here. Markets like to move in 5-wave structures or 3-wave structures. I do have a bullish 5-wave structure. That's a possible scenario I'll go over. We're also going to take a look at the MACD as well as the RSI and how you can use these to, spot potential entries and exits as well as, possible indications of future activity, whether it's bearish or bullish. So make sure to smash the like button, subscribe to the channel if you guys are new. Before we go any further, we're going to read the disclaimer real quick. The content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear in this channel are not registered financial advisors. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. All right, and we're going to go ahead and move on to the charts now. And I mentioned this 5-wave structure right here. Now, you may be confused by these sets of 3 lines right here. What these are is these are simply the Fibonacci retracement levels, okay? And specifically, these are the 3 most common and well-respected. You have the 38.2, the 50%, and the 61.8% levels, okay? And you use these 3 to identify trend continuation versus trend reversals, because nothing moves in a straight line down or in a straight line up. Rather, you would get a move up, a retracement, and then a continuation of that trend, or a move down, retracement, and continuation of that trend. Now, that's what we got here, okay? We saw a strong move up. We pushed back, we retraced to our major retracement levels, and then we pushed up higher and hit our wave 3 targets right here at 2038. Now, since then, we've started a pullback, okay? And everything above these levels that I'll go over here briefly is all going to be healthy retracement territory. But if we break through those levels, then that's how you can potentially spot a reversal, right? So if you move up, retrace, consolidate, and break through those levels, that's a potential downside reversal. And if you move down, retrace, consolidate, and break through those retracement levels, that's a potential upside reversal. So we see here, we got the 1, 2, 3, we hit the targets right here. All right. And now everything at these levels right here from 1847, 1887, and 1927, those are going to be all healthy retracement territories. But if we move down, consolidate, and break through those retracement levels and flip 1847 to resistance from support, then we could potentially retest some of our previous lows and get that reversal. So that's something you need to be mindful of. Okay. Now, we do have the bullish 5-wave count, and that would take us up to about 2237. But there's a lot of work to be done beforehand. Okay, so that's only if we're going to get a healthy retracement back for wave 4 and hold in our major retracement levels, and then continue up for a wave 5. That could potentially take us up to 2237. Now, there are a couple warning signs flashing right now. Not only do we have this chart pattern here known as a rising wedge, this is a bearish chart pattern. If we break that trend line, it would take us down to where the pattern, started to begin and started to form. So you do need to be cautious of that. If you pay attention to the MACD here, we also had an exit signal, okay, which is when this red line crosses below the yellow line. That's typically known as an exit signal on the MACD. The opposite of that would be an entry signal. So if you take a look here, when the red line curled up above, right, and that happened right over here, we had a strong push to the upside and hit our wave 3 targets. So we've gotten the MACD crossover to the downside. If we take a look at the last time we got a MACD crossover to the downside in this period, you can see that we fell back down to our major retracement levels. So you do need to be cautious. All right, 1969 is going to be a strong support level right now as well. If we break below that level, then most likely we're going to end up breaking this trend line here on the rising wedge and could come back down and retest those major retracement levels. Okay, so pay close attention to those. Now, on top of that, okay, so besides those 2 warning signs, we also have something known as bullish divergence. Take a look how we have a high here, and then we have this set of lower highs. So the RSI is trending down, making lower highs. This is meaning that the token is losing relative strength, okay? The RSI is going to measure the relative strength of a token at its given price. Now here we have a high, and then we have a series of higher highs. So meanwhile, the token is making higher highs while the RSI is making lower highs. This is a term known as bearish divergence. We got a bearish MACD crossover, and we have a bearish chart pattern setting up. Now, none of these have to play out. No one indicator is 100%, but these are things that you want to be cautious of when you're seeing multiple signals flashing the same thing. You want to prepare yourself and have some type of plan accordingly for the future possible scenarios. So that's really all of the major levels that I'm paying attention to, and all of the key things that I'm looking at right now. Hopefully you enjoyed this video, and if you did, smash that like button and subscribe to the channel. I appreciate you making it this far. If you did, most likely you're going to enjoy one of these next two videos as well, so be sure to click on one of those.